Hey, happy weekend. Welcome back to another video. Somebody requested I make a video on risk reward and the strat and why it's really not talked about very much. And it's all kind of baked into the sheet right here. So if you're bearish, entry, target, stop, pretty self-explanatory on the sheet. Now, the thing about the strat is it can be as simple or as complex as you want it to be. So we are going to look into what I mean. We're going to look at Bitcoin because it's a 24/7 market. And so with the strat combo sheet, this is a rev strat. So it would become actionable if this month we break below August's low. It's a 1, 2 up, followed by a 2 down. There's two places you can put your stop. You can put it all the way at the top, which is obviously a big stop, or you could use, that's what we call a trend-based stop, or you could use the 50% rule stop. And that is the simple way to trade the strat, just using one time frame. So if you're only using one time frame, your entries and your stops have to be based on the one time frame. Now, the good thing about the strat is we don't have to use one time frame. Everything is fractal. So if we're bearish, the right side of this chart are the bearish setups. There's some more down here. So here's the monthly rev strat. What we're going to do is we're going to go down to a smaller time frame and find better entries and better stops. So whatever time frame you find the setup on, so this is the monthly, you want to go down a time frame or two. And you always want to have your trigger marked and your targets. And that's pretty much it for targets. So what you do, go down to a smaller time frame. Now, everything that's on this monthly chart is also drawn on the weekly chart. My drawings all sync, which is very helpful. So let's pretend this weekly candle is closed, which it's going to be closed very soon. And we look for actionable signals, bearish actionable signals on a smaller time frame. So what would be an actionable signal that could trigger us into the monthly setup early, giving us a tighter risk reward? Because remember, if you're just using the monthly, you have a huge stop. So it'd be from 19.5 to about here. Regardless, that's almost a $3,000 stop. You don't want to do that, right? So we go down to a smaller time frame and find the actionable signals. So the most likely actionable bearish signal would be a 2, 1, so an inside bar, 2, reverse. That's what we're looking for, a 2, 1, 2. An inside bar break is actionable. So knowing this, you can then take what used to be your monthly stops. Now they're going on the weekly. So what you just did was significantly reduce your risk. So next week, when the candle opens, if you trigger this week's low, you're going to want to be short. And then again, you can use 2 stops, whichever one you want, whichever you prefer. So you've got the 50% stop, because if it goes 2 down and then starts failing, we're going to assume it's going to become an outside bar like this. Actually, it would be a bullish outside bar. So it would look like that. So that's why you'd want your stop there. So you just lowered your risk from 3,000% on a 50% rule stop to using the weekly and lowering that to about $500 stop. Okay? And it doesn't stop there. You can also go down to the daily. So if we let's pretend this day doesn't exist, okay? And we find an actionable bearish signal on the daily. What would that look like? That could potentially trigger the monthly. Remember, we care about this monthly setup. That's the setup that we're watching. So we're thinking, can the weekly trigger the monthly? Hopefully. Okay, you can also go down to the daily. Can the daily trigger the monthly? So that actionable signal would look like this. So you'd have your trigger, okay, and then you could have a 50% roll stop, put it there, or a trend-based stop. So now you only have a $300 risk, but all that monthly reward. Everything is fractal, so we use the smaller time frames to trigger the larger time frames. We call it the domino effect. And it also gives us full time frame continuity. So that is what is so beautiful about the strat and risk reward. And you can go down and down and down. So say you're looking at a daily strat setup, whether it's bullish or bearish. If you're looking at the daily, you can use any of the smaller time frames intraday to get in on it early or hop in if the move still has magnitude. So you can use the hourly, the 30, the 15. It's all, you have so much control over your entries and your stops that there's no need to be fearful. We execute, we put our stops where we're supposed to, and that's it. Okay, I hope you guys learned something today. Have a great Labor Day weekend. I'll see you guys around.